the Dixie dollar, the USD, and I put a lot of different timeline correlations in with these ups and downs to try to figure out exactly what kind of narrative they're painting, because there's always the dollar falling and they're doing this and they're doing that, and that's going to make dollars do this. And I just want to let everybody know that the narrative that they're painting, where the dollar declines, the dollar descends, that's actually a positive thing for the United States. That's what we need if we're going to expand. That's what we're going to need if we have this so-called golden age that we're all looking to get rich. And all of a sudden, it's easy to get rich. It's just hard to stay rich, you know? That whole narrative. So I just want to show you, here's where we abandon the gold standard. And this is where the country, boom, as a beautiful thing from old Nixon. And then Reagan came in, the oil crisis, the unemployment 10%, stocks. Because see, we just got comfortable here where there was no growth, where there was no expansion. So we needed a tighter policy to hold up some of the money so that we could have more progress, but things will slow down. So people will be a little more hungry, so that supply will go down, demand will go down, supply will catch up. And then here, we realized, okay, now Americans just can't afford nothing. We're not doing anything. Let's sign the Plaza Accord. Let's use the whole dollar as a world currency. And then once it got to this level, the OPEC agreement came in. And it's actually quite interesting, this OPEC agreement, because the OPEC agreement, if you look at this line here, we abandoned the gold standard. We agreed to the OPEC. Here, September 2001, we needed a pullback. And here, check this out, boom, we needed a pullback. We needed a pullback. This right here, my theory is when we get close to this OPEC agreement line, I agree that oil should be this and that, and we're going to all use the United States dollar to buy oil all over the world and create wealth and blah, blah, blah. Once it gets here, I feel like it's not good. I feel like it's not good at all, and this is not good. You can see right here, the Clinton administration, where we went in, you know, unemployment was 7.8%. The Dow Jones, I want to also point this out, when the dollar is low, the Dow Jones is up, plus 13% right here. Okay? Now unemployment was here 7.8%. Unemployment gets dropped, we expand. You see, when the dollar loses value, we expand. The United States expands. Stocks go up, we're bullish. When the dollar goes down, we become bullish. That means we have more buying power. We have more buying power. Also, I want everybody to understand the Fed fund rate and the banks. This is what is called, aka a discount rate, that the feds give the banks to loan money to people. And then this is the rate that the banks charge the people. It's almost double if you look through history. It really is. You know, 4.5% to 7%, 8 to 13%. Right here. Well, now here was a good time right here though. There's another thing I want to point out. If you're still with me, this is beautiful. 1.92% right here. This was the 2008 housing crisis. This was when the interest rates were at its all-time lowest, so say. You know, here we are sitting here at interest rates, fund rates of 4.5%, 7% housing rates. Dow Jones down 7.1% for the year. Back here we was up 13%. Okay, do you see the correlation here? When we're at a peak, when the dollar's at a peak. Now here I want to say, we'll get to that. But here, they met invasion to Afghan, the 2008 housing crisis. The Fed fund rate was 1.92% right here. Everybody was getting loans. Everybody was getting paid. Everybody was borrowing money because it was cheap. They was almost paying you to borrow money. And then we came here, and then COVID happened. And then inflation from COVID, and then the interest rates had to be tightened because the Fed fund rate. They went from 1.6% to 5%. 5%. That means they pulled back all the reins. That means no advancement. No advancement. Now, the other thing I want to point out, we got the Plaza Accord. Now let's go here. I'll make this super quick because I've already made this way too long. The Plaza Accord joint agreement signed on 1922-85 Plaza Tower, New York, between France, Germany, blah blah blah, to depreciate the U.S. dollar in relation to the French franc, blah blah blah, currency, blah blah blah. All right, so right there, an agreement until it was replaced by the Louvre Accord, which I don't know in '87, but we'll look up. Now listen, that was in the Reagan, and I want to show you what that Plaza Accord did. Boom, Plaza Accord made that dollar down 32%. They said from the time they signed it to whatever. Yeah, but then let's go deeper, because look what Trump's doing. The Mar-a-Lago Accord. Devaluing the dollar, reducing trade deficit. Just same thing. Devaluing the U.S. dollar to address trade imbalances and enhance American competitiveness. So what they want to do is they want to drop the US dollar so that everybody, because right here, this line here, this is when everybody comes and they build. They want to build in the United States. It's such a good time. Taxes are cheap. We can afford to expand and grow in the United States. So right there, Plaza Accord, Mar-a-Lago, that's what Mr. Trump wants to put in. He is doing exactly, basically, what the Biden administration had put in play. And we're not agreeing with it, but we are agreeing with it, you know? We are agreeing with it. I'm agreeing with it. I think we finally got it. But I just want to show you, you know, what we need to do here in 2025. We went to 4.3%. We're loosening up. That's a good thing. We're loosening up. That means the value of the dollar will go down. We'll have more money. I want to say this here was different than these pump dumps. Why? Why do we have steady growth when in such a inflated time as of COVID? Well, I would say because we printed money. Because the Fed printed money. We printed money here, which kept everything in balance. Now when everybody gets called up, the debts come in, the banks and all them, that's when everything's going to be. But right now, if the dollar will devalue, we're going up, ladies and gentlemen. If the dollar will devalue, then we're going up, and which I already think, from our look into this here, we're going to find our way into a nice push-up. Boom. That's what I would like to see. Yes, sir. I don't care if it's triple top or not. That means all these other stocks will go boom, boom, bang. And I mean, we've had a lot of red in the last week, 10 days. But you know what? People are really thinking what's going on. Is the bottom really falling out? Blah, blah, blah. Maybe it is. Maybe it's not. But to me, it just looks like good proper TA. Watch the news because it will, boom, expand and make things happen. Make things happen. Let's talk about Bitcoin. If the dollar devalues, Bitcoin, your buying value will decrease. That's something to know, look forward to, maybe think about. The banks, another one to look forward to. The airports, another one to look at. Because when these things fall, when the people want to know where all the money is because of the inflated, blah, 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 when the deep value of the dollar comes down and everybody wants to get paid, and yet the dollars are worth less, these stocks are going to be bailed out by the United States government. Yes, they are. Yes, they are. Look forward to it. Look at it. Do your research. Due diligence. Not financial advice. Just something to point out. This is what we do every single day. You touch money every day, all day long. At least if you do, I mean, at least you're supposed to. If you don't, you need to get up and do something and figure out what it is you're doing with your life. Because that's what makes the world tick. That's what we take. That's how we take care of people and do what we need to do every single day. Thank you. Come again.